Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. Back in January this year, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to see it if you haven't already. In this video, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence, recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitch hook. And the key specific piece is the bright red upper time, currently at 13,455. That slashes across and just below today's range. This bright red upper time had previously capped prices, despite one occasion back in December last year, had capped prices until early May this year. It was a key piece of overhead resistance. I then started looking for the next pattern, and 4 weeks ago this came down to these possibilities. The first and still working pattern is the purple November 25 to March 26 bullish shift pitch hook, with prices in between the overhead purple middle time, currently at 14,356, and the purple lower time below, currently at 12,697. The second possibility is just about working as a pattern right now, and as one I've been somewhat uncomfortable with, but has shown some interesting influences. It is the possible late December 25 to early May reverse head and shoulders pattern, a pattern that's usually considered bullish, though there is a bearish continuation variety. The bright pink neckline, which currently 13,400, is very close to the breached bright red upper time, that for now we can basically look at them as being the same. The market is now just above the bright pink neckline, and I had previously considered the following, which I'm happy to repeat again, and I quote, lay out what I consider potentials right now, not targets as yet, but potentials for the move higher. Thus, a primary potential be up in the 14,747 area, thus above the high of the market, and a secondary harder to reach potential be up in the 15,271 area, close to the top of my daily chart. I have doubts about this pattern. I think it is the weakest by a country mile of the ideas mentioned. End of quote. This weakness has been justified, as prices have for almost the last 3 weeks been below the bright red upper time and bright pink neckline, though we are trying higher today. The third and newer pattern can be seen as either an early May to late June descending triangle, currently at 13,431 to 13,724, utilizing the bright pink neckline as the base of the triangle, though I have also drawn a dark blue trend line for both the lower and upper trend lines. Or it can be a longer term end of January to late May possible descending triangle, utilizing the same base but with a higher downtrend, currently at 14,005. I've not as yet highlighted the second upper trend line of this pattern, as I'm not all that keen on this latter pattern, but I could still see the former happening. I spoke about the early May to late June descending triangle pattern quite extensively 3 weeks ago, and it's worth repeating and considering those words now, and I quote, thus, in the time between my commentaries, it might be worth looking at further potentials, not targets, but potentials on the downside this time, of a primary potential down in the 13,033 zone, and a secondary hard to reach potential down in the 12,645 zone. Be interested to see if this develops. Before you ask, I've considered the possibility of the May to day action being either both a head and shoulders top and a triple top, and for now have discarded these ideas. End of quote. The primary potential at 13,033 was reached 3 weeks ago, and 2 weeks ago I formalized the harder to reach secondary target X at 12,645. Oddly enough, I continue having further doubts about target X after seeing how the market performed, supported by the bright green neckline, currently 13,116, of the July to September 2024 reverse head and shoulders pattern, plus the nearby 50% Fibonacci line of the March to May move at 12,947. And I may retire target X by next time, depending on what the market does in the meantime. There is a final very recent pattern I would like to discuss, but it is so recent I had doubts about it last week, though it seems to be resolving itself favourably today. But it's still early yet. It also throws yet another variable into the mix. It's the pattern idea of a mid-June to date, let's call it, not mid-June to date. Let's mid-June to date date, or at least mid-July, small ascending triangle pattern. A small gold uptrend, currently at 13,305, that crossed the medium moving average last week, which is currently at 13,212. Late last week, prices started testing the dark blue neckline, currently at 13,431, the one for the descending triangle, and have seemingly exploited that move higher today. Thus, a primary target X1 for the move higher is up in the 13,828 area, which is still a significant distance away. The secondary harder to reach target X2 up in the 13,976 area. What is interesting about these targets is they are beyond the dark blue downtrend, which is currently at 13,724, of the previously mentioned descending triangle, will thus likely negate and retire target X below as a false break on the downside if they come about. It is as I said last week, and I quote, "All this leads me to suspect with all these patterns we are coming to some sort of a cusp. Maybe in the next month or two, so watch out, as we could have an explosive rendition after the possible cusp." End of quote. LME 3-month aluminium. The market here edged out initially above and now in the last 3 weeks below from what was originally a bright green April/May 2025 to date bull channel that morphed over time into an April/May to date very large bright green rising expanding wedge pattern, currently 31.97 to 37.71. However, the edging out has only resulted in breaches, extensive breaches in some of the cases I grant you, but just breaches, not breaks, of this very large rising expanding wedge pattern. The price drop from the upper trend line back at the start of June saw prices hesitating for a bit between the short medium moving average, currently at 34.39, and the important purple middle time, currently 34.83, of the big old November 15 to April 20 bullish Andrews pitchfork, and forming a bearish halfway hesitation stroke bear flag, dropping down to the medium moving average, currently at 34.17, forming another bearish halfway hesitation stroke bear flag there, with a subsequent second drop down to the 50% Fibonacci line of the March to September 2022 move at 30.76, where they stabilized. I said 3 weeks ago, and I quote, "On this basis, I'd watch out to see if we would soon form yet a third bearish half hesitation stroke bear flag pattern around the gold long moving average below." It's currently at 31.81, and the bright green lower trend line, currently 31.97, of the previously mentioned very large rising expanding wedge pattern. End of quote. We have indeed formed a pattern around these two supports, but it was not, or should I say, it is not right now, a bearish half hesitation. Instead, we have seen the formation of what looks like a 3-week-old, or thereabouts, possible reverse head and shoulders pattern, a pattern that's usually seen as a bullish reversal, though a bearish continuation pattern does exist of this variety. We're still finishing the construction of this pattern, so I cannot give targets as yet, but I can give an idea of the potential size of the move should the pattern be completed and prices turn higher, breaking its bright red neckline, which is currently at 32.29. Thus, a primary potential be plus $123 US dollars, and a secondary harder to reach potential be plus $173 US dollars, both from confirmed breaks higher over the bright red neckline. And now watch with interest if this is what the market will do. As further down, we have the first of a series of stratified bands of congestion between 30.65 to 30.76, and again 29.74 to 30.23. That one contains the dark blue neckline extension, currently 29.89, of the large 2022 to 2024 reverse head and shoulders pattern. Now, 3 weeks ago, I started looking at the whole 2026 action, as well as earlier from summer last year, as a possible new and big pattern. I said at the time, and I quote, This whole 26 to date structure, possibly even earlier, reminds me of an inverted descending scallop pattern. A thought pattern I might explore if this move lower continues below the gold long moving average. Well, last week I amended that view with a possible inverted descending scallop pattern to a bearish bump and run reversal, with the market then in the run phase. We've already reached the primary target for this pattern at 32.02, and we still have the secondary harder to reach target X down at 29.75, just under the dark blue neckline below. However, in the light of the possible small reverse head and shoulders pattern, I'm thinking of at least suspending this pattern until I see if the small reverse head and shoulders pattern has the desired effect. Finally, I should once again like to expand on the purple tine, now above, currently at 34.83, of the very large November 15 to April 20 bullish Andrews pitchfork. This bullish pattern is still in operation, as the upper tine is right now still up off the top of my daily chart, and the purple lower tine, currently at 26.60, is down towards the lower end of my daily chart. This leads me on to my final point, and that is, with all these recent actions, we made a monthly key reversal down for June last week, with all the ramifications that may have, though to be honest, none of them have really shown up as yet. LME 3-month lead. The market's recent moves lower has led to originally 3 patterns forming, with one additional one this week. First was to regard the whole June action as a potential bearish half hesitation stroke bear flag action, a primary potential down in the 1940 zone, a zone we have already reached, and a secondary harder to reach potential down in the 1882 zone, close to the lows of this year, and one which we also reached 2 weeks ago. The second pattern was the monthly key reversal down for June, finally formed in the middle of last week. The third pattern is the early May to late June head and shoulders top, a bright red neckline above, currently at 19.15. 3 weeks ago I said about this pattern, and I quote, "We're in the final stages of completing this pattern, so I cannot give targets below, assuming of course it is a head and shoulders top. But I can give an idea of the size of the move, should it happen in between my commentaries. Hence, for a confirmed break below the bright red neckline, we would have a primary move of about minus $50 under the neckline break, and a secondary, harder to achieve move of minus $97 under the neckline break." End of quote. We had a break lower below the neckline in 3 weeks ago, and I added 2 weeks ago to this commentary, and I quote, "Since then we have had a break lower, and hence it gave a primary target at 1881, a target we reached today, and a secondary hard reach target X1 down at 1834. End of quote. 2 weeks ago, we moved relatively close to target X1 before backing up a little, but only as far as the congestion at 1888 and the lows of March. We have spent most of last week hesitating there before this week heading lower, with a bearish opening Black Mariposa on Monday. We're now back on track to possibly reach target X1, so watch out. The only quirk would be if we form a double bottom pattern over the last 3 weeks or so. Then there is the new pattern which I have drawn today, a dark blue January to June bearish Andrews pitchfork, which might show some insight into the bearish angle of attack here over the last few. Now, over the last few weeks, prices have bounced up off the declining dark blue middle tine, currently at 1849, which might be giving support, if declining support, but giving support each day. This is one to watch, as though I am happy in a heartbeat to finesse it to a shallower bearish shift pitchfork if the market demands it. This brings me to my final point, and it's a point I've been making here since the start of 2025 and continue to do so going forward. At the end of December 2024, we saw the market had created a very large and rare annual key reversal down in LME 3-month lead. Since then, well, we really haven't done that much, especially as compared to some of the other metals. Indeed, prices are only about $90 or so lower today than they were at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a repudiation of it. Hence, I still say, even now, prices where they are, that one should still look at all things going forward in this year and beyond, here in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.